Shriram Transport Finance. The stock has fallen 10% from its 52-week high that it hit on 27th April. However, the CV cycle is on an uptrend and Shriram Transport is the market leader in the organized sector of used CV financing. Why did the stock fall? The stock fell on fears that an increase in load factors for commercial vehicles may impact their overall sales. There are also concerns that a move towards the IND-AS based reporting of results may impact its financial. Under IND-AS, the incremental slippages of last 3 years, X of recovery expectations have to be written off from their net worth. So what are the triggers for revival? Well, in FY18, if you look at the overall CV sales, that was clocked in at 8.6 lakh units, surpassing the previous high of 8.1 lakh unit in FY12. So in the last 4 quarters also, CV sales have been pretty strong. You look at the growth from Q1 FY18 at minus 9%, it has moved up to about 31% in Q4 FY18. So apart from that, what are the triggers for the company overall? The quarterly disbursement in Q4 was at 15,000 crore rupees. So the disbursement to AUM ratio, that is how much of disbursement goes into AUM and the repayment, is at 2-year high of 35%. So if you analyze the disbursement of 15,000 crore, for FY19, that disbursement works out to about 60,500 crore. So if you take into account the disbursement to AUM ratio of 35%, it translates into an AUM growth of 22 to 23% for FY19. With the worst of asset quality woes behind the company, the management actually expects a 70 basis point decline in the credit cost. So while you factor in the return on assets, if you maintain FY19 at a statutory ratio of cost to income level, the ROA can improve based on the fact that credit costs will decline. The demand will also be driven in their rural centers. If you look over the last 1 year, they have opened 200 branches in the rural sector. Coming on to the brokerages, CLSA has a sell rating on the stock with a target price of 1,210, while Morgan Stanley has an overweight rating with a target price of 2,000 rupees. They also believe that they see an EPS CAGR of 52% over FY18 to 20. Motilal Oswal has a buy recommendation on the stock with a target price of 1,950, and they believe that the return ratios are just of cyclical ratio and the valuations are very good. If you look at the peer comparison in terms of valuation, Shriram Transport is below 40 to 45% of the valuation that is being for Cholamandalam investment. So Cholamandalam is actually trading at 4.3 FY19, while Shriram Transport is trading at 2.3 times FY19. This is not a stock recommendation.